So Monday morning, slow start. And what do we see here from the crude market? Drum roll, please. What is this? This is a bear channel, right? This isn't just any old bear channel, right? That's a pretty darn strong, easy to see bear channel. That was the first thing we saw right away. And do you remember what happened to the dollar this morning? What was the dollar doing? The dollar was actually in the exact opposite direction, wasn't it? Right? That's a pretty convenient negative correlation we had right off the bat today. First things first, though, bear channel here on crude tells me what? What does the bear channel tell me to do? Sell retracements, new lower lows, and sell at resistance if price was to rise back up. So that's what the bear channel tells me. Right off the bat, we get a great heads up here in the market. Then, we also noticed I've got my previous high of day all the way up top here. Now remember, guys, I'm not going to use my Sunday high on Monday morning. I'm going to use the Friday high. Okay, so that's my previous high of day, technically the way I see it. Okay, I don't count Sundays, I count Fridays, right? Monday through Friday. But I want to see where Sundays are, right? This is Sunday's high right there. And of course, Sunday's high right there helped us to find, right, this channel. So I'm going to use Sunday's high, but I'm not going to use it as the previous high of day, right? The previous high of day, very important. Again, if you want more information on that, look at our blog. Type in previous high of day. And guys, if I've said it once, a million times, the previous highs, previous lows are extremely important for me. And again, we'll talk about that with members only in trainings here this week. So previous low of day then ended up being, there's my low of day from Friday, there's my low of day today, or a low of day, previous low of day. So we said, aha, this now becomes an outside day. Here's my range above me. So there was the trading range above me. And of course, where are we? We are below that. What do we call that? We call that an outside day. Now think about this. Bear channel, outside day, what does that tell me to do? Sell retracements with new lower lows. Outside day says moving market, something's changed. So we get a great correlation with the dollar, right? The dollar is up here trending higher. Crude is down here trending lower. We have an outside day. We're below the previous low of day. Guys, this is the perfect storm for what? Selling short. Absolutely. Now, by 10 o'clock this morning, we had price that made it all the way back up through the tie, up to the previous lows, and then bam, we sold it back down. Or in this case, I get in long with a pullback. By the pullback in the 4-range chart, 31 takes a profit. We then go all the way up and we break above the previous low of day. And remember, when I get above the previous lows, now we have an inside day, which completely changes the way we work at this. When I go back below the previous lows, comes an outside day. Now we had one big red flag here, and here's what happened. We got the open right there. The green line is the open. Then what do you call this? I call that support, channel lows. And then what do you call this? I call that support, channel highs. So here we are now. We find ourselves literally stuck by the open. I'm at the lows of the bull channel. I'm at the highs, but I'm above the highs of the bear channel. So 1, 2, 3, that's 3 reasons to call this higher risk. And you can see we're right here. We're at that crossroads between price rising above the previous low of day and falling below the previous low of day. And if you recall, we talked about this specifically. The first trade here was called higher risk. It was called higher risk ultimately because we knew that when we came down, I knew it would be a very high percentage trade, but we knew that trying to get below this right channel high, that was the key. So I tried to get a little bit tricky here, got in early, right, took a loss on it, negative 16. So at 10:07, I tried to sell the highs. And I told you guys exactly my concerns. The open, high of the channel, low of the channel. Basically, remember guys, even the high of that channel will be support. It'll bounce off that high and keep going. So we knew it would be higher risk here. Again, if we could get it going though, look at all this wide open space now down to the lows of the channel. So that was kind of the prize, right, we were trying to get to. We're trying to get short here so we could hold this thing all the way short. And of course, the first one was higher risk. Took a loss on that one. Minus 16, right? 4, minus 4, minus 16. 10:09, another one, right? Try to go one more time here. 10:09, plus 5, minus 5. And then by 10:18 here, the re-entry, 95.48. You can see we're down here now. Now we finally get the winner for 36 ticks. Well, that was only getting the party started, because what happens is now we break back up, we retest the highs. Guys, bear channel, dollars making new highs. We just failed to break above the previous low of day. That might be the biggest clue we got. If we can't keep going above the previous low of day, that means sellers are dramatically in charge here, and they're going to keep pulling this thing down. That's a failure pattern as easy as it is. So a failure pattern comes up, we come up, retest the highs, this channel here, and I sell short. At 1032, sell the high as the channel. Now I'm using that high. Remember, guys, before the high was support. Now this high is resistance, right? Makes sense now, right? So now you know why I was talking higher risk earlier on in the morning, because we weren't quite into that channel yet. So price gets a new lower low, I sell the retracements. I give you guys a couple fast track winners on the way down, and 1032, I make a 68 tick winner here. We take profit off all the way down here at the lows. Now notice this level here, that level there, right? What does that make? That makes a wedge. So there's my wedge. I took profit off here at the lows of the wedge.